Welcome to Globe Watch with me, Charles Ebune. Most African countries are making significant progress today to revamp their economies and give them better days ahead. Such is the case with the Nigerian economy, the South African economy, and the Angolan economy, three of the continent's first oil giants, terribly affected by the downward moving oil prices, especially those of petrol across the world today. So, what kind of mechanisms do we need in Africa today to accelerate development in a continent which is simply qualified by many as the future of the world? My guest, the former Rwandan Minister of Finance, who equally served as the president of the African Development Bank. Donald Kaberuka, welcome to Globe Watch.
Thank you.
You were the former finance minister of Rwanda, a country which has transformed so well economically. Tell me the economic ingredients you injected in the Rwandan economy for it to be so performing and other African economies are not doing well.
Thank you for the invitation. But can I first begin by correcting a misunderstanding? I think the average growth for Africa in this year is what you say lower than the previous years. But this is because of three countries: Nigeria, Angola, and South Africa. If you exclude those three, actually the average growth on the continent is 7.5%. Because of the weight of these three countries, and in the case of Angola and Nigeria, dependence on oil, the downgrade has meant that the average for the continent is lower than the previous year. But many other countries who are non-dependent on oil, who are much more diversified, are actually maintaining the momentum of previous years. Did you know that Cote d'Ivoire will grow at 9%? Most of the East African countries will grow at above 7%. So you have to nuance your numbers and interpret what the IMF says. Now, coming to countries like my own, remember every country is different. Rwanda began from a very low base in 1994 after the events which you know very, very well. And so government put in place a number of mechanisms to try to rebuild the economy, which of course cannot be compared to any other parts of Africa. Now the particular ingredients are not rocket science. There has to be firm macroeconomic policies, emphasis on structural policies, a huge emphasis on governance, and a strong leadership from the government of President Paul Kagame.
When you talk of micro and macroeconomic policies, that is probably for some of us in the academic class. But when you have to spread that message across to the ordinary person to understand what you are talking, what do you say?
I would say to them that inflation and unstable currency is the worst thing which could happen to a country and poor people. So macroeconomic policies, when they are stable, they translate into lower deficits, stable currency, lower inflation, and those things are good for everyone. So simply put, that's what it means.
It's because of your success story, partially at the Rwandan Ministry of Finance, that you were elected to become ADB president. When you were at the African Development Bank as president, what problems did you meet and what solutions did you provide?
First of all, I don't know I was elected. Only the electors can tell you. I mean, there were 7 candidates, all of them very good, all of them capable of running the bank. But it happened that someone had to win, and it was me. And I thank the electors for that. Now, the challenges you face in running large international organizations are the same. They reflect the client's own difficulties. So the African Development Bank will at one point resemble its clients. So at the time in 2005, Africa had just turned the corner from years of decline in real per capita incomes. And for the first time, you could see growth picking up in Africa. So my challenge was to figure out how to get the bank to accompany this new Africa, which is turning the corner for the first time. therefore putting in place policies like promotion of infrastructure, private sector, economic integration, the kind of things which would then encourage the movement forward, which Africa was experiencing by 2005.
You just spoke of so many issues there. Let me just pick one of them, infrastructure. And let me just land on energy infrastructure. As you and I speak, you have 620 million Africans who are energy impoverished, and it seems very difficult to solve that problem. Why?
It is not difficult if the policies are in place, and I'll explain. Today, the average availability of power for many African countries is around 100 units per person per year.
But you know that the figure I just gave you is roughly more than half the entire continental
But
population.
I'm explaining to you what that means. The energy approach you are referring to should be looked at from 4 angles: energy availability, energy access, energy affordability, and energy sustainability. The 4 things, they have to be addressed at the same time. They will not be addressed by public money alone. They will be addressed by the public investment and private sector investment. And for private sector to do so, to generate power, it will take a policy space which is carved out for that. For example, the tariffs have to be right. The subsidy management has to be right. The national companies which buy electricity have to be financially sound. And so once those policies are in place, I'm confident that we know how to put turbines in the water. Do you know this region, the Congo Basin around here, is one of the largest providers?
Well, many people can name that. The Congo Basin, Cameroon and Nigeria host to some of the largest hydropower production systems you can imagine on earth. But the simple reality is that these countries have been unable over the years to transform their potentials into concrete economic realities to reduce the misery of their population. Is it a governance issue?
I'm putting to you that it costs about $1 million to produce a megawatt of electricity. $1 million, a megawatt of electricity, if it is hydro. If it is non-hydro, it's even more. And I'm saying to you that the public sector alone cannot resolve this problem. It will have to be a combination of private sector, independent power producers, generating power,
Do we lack that
selling
money
it to
you are talking
government.
about? Do
And I'm
we
saying
lack
to you that
money?
we need institutions which ensure that tariff policy is in place, subsidy policy is right, regulators are free in fact and law. So the problem can be defined. We know how to do it. But the institutions, the policies, have to be the right ones.
Mr. President, do we lack that money to do that?
I'm-
You are
I'm-
very much aware that 60 billion of Africa's stolen money is lying somewhere in European banks.
You're
Do we
referring
lack
to illicit capital flows.
the illicit capital flows? The Kofi Annan report says that the continent loses $50 billion yearly through that system. Do we lack the money?
Well, you know, development is made by 3 things: money, policies, and delivery capacity.
So where is the missing line for us in
May I
Africa?
now put it to you that the issue I've just referred to, the illicit capital flows, is actually a result of our limited delivery capacity. So multinational corporations come to Africa, all right? They realize we have limited capacity to ensure they pay the taxes they should pay. So they put in place management models which make sure that the money ends up in tax havens. So it is an issue we have to address together with the international community as we build our delivery capacity to ensure that our fiscal systems are able to make sure that people pay the taxes they should pay. But I'm putting to you again once more that money is important. But if money alone was important, Libya would be the richest country in the world. So money is needed, but so are policies. But policies also have to be accompanied by good delivery capacity. The 3 together is what gives you a solution.
You were at the highest level of the African banking system, the African Development Bank. Each time I get documents concerning African economies, either we are borrowing from the European Union, we are getting money from the American financial system, or from Asians. Why do you think that most African countries get aid for development and financial loans from foreign banks at the expense of the African Development Bank, you seem not to be working.
I think you have, your information is either outdated or an outsider's information. Let me put this to you. These are the numbers you should look into. Of the $400 billion, which are applied to development in Africa today, aid accounts for only 50 billion. I said 50 billion. Out of $400 billion applied to development. Of that, the African Development Bank has been providing per year close to $10 billion because our balance sheet is limited to that capabilities. So I do think that if you look at the portfolio, at least when I was head of the bank, we doubled the portfolio. During the global financial crisis, we even bypassed the World Bank. We put out there $28 billion for infrastructure. So the African Development Bank.
And what was the figure from the World Bank?
For infrastructure?
Sure.
Probably 2.5 times, because the balance sheet is bigger. But I'm putting to you that beyond providing money, which of course has to be consistent with the sound management of the financial institution, we also provided financial support during the crisis, which threatened to undermine our progress. And in that year alone, we went up to $12 billion in counter-cyclical lending, liquidity support, trade finance, picking up projects which are at risk of being delayed. So whether in regular lending, in policy support, or counter-cyclical lending, I think over the last 20 years, the bank has done quite a lot. And I invite you to look at the documentation to that effect.
You spoke of 3 countries a while ago with a very large impact on Africa's GDP. Future-like doesn't mean that if Nigeria's economy is terribly sick, as it is the case today because of falling oil prices, the Angolan economy and the order is sick, the whole of Africa is in danger. How do we?
First of all, I don't know if it is. I don't know.
How do we move from that from that dilemma?
Wait a minute. Sickness is not my word; it's yours. But I'm putting to you that the South African economy alone is equal to 32% of the entire sub-Saharan African economy. Add Nigeria, you have close to 60%. So if 60% of the economy is growing at less than 3%, clearly the average would be lower, isn't it? So this is what I'm saying to you. But I'm saying if you want to look at what is happening in Africa, and you focus only on commodities, you will find volatile growth. If you find countries who are growing steadily, those are mainly non-dependent on oil. So there is growth with volatility, which is associated with oil-dependent countries, like Nigeria and Angola. South Africa is having other challenges, but many of the frontier markets in Africa are doing quite well, actually, and they've been able to adjust to the global economic crisis.
So what therapy do you apply to the Nigerian economy? For instance, to keep it on the right tracks. As you know, for the moment, the budgetary situation is not the best. President Buhari just signed into law the budget finally after months and months of wrangling between the Nigerian executive and the Nigerian legislation.
Look, I'm not a member of the Nigerian government. You'll have to ask the government of Nigeria about those choices. But I can speak to you as an expert in the field.
Absolutely.
I do think all oil exporting countries, whether it is Russia, Saudi Arabia, Venezuela, Nigeria, Angola, have to adjust to a new normal, which is lower oil prices. And that means you have to allow some adjustment in the currency. You have to allow for some adjustment in the budget, reprogram your investments, and be ready to move to the next stage. So adjustments to ensure that your balance of payments remains stable is what has to be done everywhere.
No, I just heard
but
you say,
before I finish,
I just heard you
no,
talking about adjustment in the currency. Do you propose, for example, so many economists have called on Buhari to do that, to devalue the Naira?
It is not up to me to decide whether...
You said you are speaking from an expert point of view.
Yes,
so from an expert point of view, will you advise the Nigerian government, if you were hired, will you advise them to devalue the Naira to balance the books?
I'm putting to you that the adjustments needed in the macroeconomic area, on the fiscal side, on the balance of payment side, are necessary in all those countries who are facing this problem. And that may include adjustments of the currency. You know, currencies go up and down everywhere, all the time. So there's nothing about a particular fixed parity at any point in time. Now, how the adjustment of the currency is done is country specific. But whether the naira should be devalued, you'll have to ask the Nigerians. But if I was sitting in the central bank of Nigeria today, I would definitely advocate for a policy of adjustment of the currency.
Of the currency. What kind of adjustment are you talking about? Devaluation? Why are you afraid to use the word outrightly?
You know, the word is important, but the process is even more important. Some people have one time called devaluation export subsidy and import surcharges. So for me, the word is not important. What is important is adjustment to ensure that the balance of payment responds to the global shocks due to the low oil prices. Now, I'm not afraid of the word devaluation. As finance minister of my country, we're devaluing all the time. Many countries in the world have the currencies go up and down. That's the nature of the things. But if you don't do that, here's what will happen. The currency will find its proper value in the black market. The goods market will be functioning at the proper market price. So if you refuse to adjust the currency, you end up with two situations: the official market and unofficial market. And you end up with distortions which can be very, very damaging in the long term.
Mr. President, we'll be concluding very soon. But what I want to learn from you is that when you look at the unemployment situation in Africa is quite disturbing. The former Zambian finance minister qualified it, especially that of young people, as a bomb in the waiting. If you take a country like Nigeria alone, according to the last Goodluck Jonathan administration statistics, 67 million of Nigerians are unemployed. That is the population of Cameroon, Cote d'Ivoire, Ghana, and probably Gabon combined. How do you establish mechanisms that will create jobs to downsize the unemployment situation?
You're talking about formal sector employment, is that right? You know, let me put three things to you for your consideration. Number one, it's not so much about employment, it's about incomes. So if you can increase the yields of farmers, if you can give them seeds and fertilizers, and they increase their yield, say, by 3-4 times, that is incomes for the farmers. And that's where to begin. Number two, I want to put you that throughout the world, jobs have been created by small businesses, not your large behemoth multinational corporations. So promotion of small businesses is the next place to be. And so the bigger question on jobs creation is about economic transformation, it's about industrialization, it's about moving up the global value chains. If you do that, that's why jobs are created. So it's a challenge which we face, it's a challenge which the Middle East faces in many parts of the world. And I resume it into transform economic growth into economic transformation, move up the global value chains. That's where the jobs are, whether it is agriculture, whether it is industry, whether it is services.
We have noticed across Africa that countries that own their own budgetary and specifically monetary policies are better performing economies. You were the president of the African Development Bank, and over the years there has been talk of the creation of the African currency model on the euro. There is one striking issue which has been of concern, the CFA franc. What comments do you learn on that?
First of all, a much broader comment. I'm not an advocate of rushing into a single African currency. You can see the euros. There are a lot of preconditions before you get there, because the economies will be different. So rather than rushing into one single African currency, there are many things to be done to bring about macroeconomic convergence of broader policies, and ensuring that we have systems in place to support a single currency. This is a lesson you learn from the euro when you have the lack of Greece and Germany in one system. So I hope one day we'll get to a single currency, but there are many things to be done before we got there.
Will you?
Now, let me answer your question about the CFA.
Okay.
Now, the CFA has created a zone of monetary stability for a long, long time. Low inflation, low stability. Very good. Number two, the fact that all these countries have come together to have one central bank, one currency, is something to be encouraged. It has worked very well. Now, should there be a change of peg? This is entirely up to the members of the region to decide. But up to now, in my judgment, a flexible CFA has done very well for the region.
You are a professor of economics, and I want to get this clearly from you, because when I talk to most politicians, they turn around the question.
Are you suggesting one?
I don't know. You said you are talking from an expert point of view, and I want you to be very frank to your academic inspirations. Does the fact that a currency is pegged to a foreign bank impede development for the 14 or 15 countries involved with the CFA francs?
Well, most currencies I know in Africa are pegged to a basket of currencies depending upon the direction of trade. So you have a basket of currencies and you weigh them according to the direction of trade. And this is flexibly done. Now, I'm putting to you that in the case of the CFA franc, a choice was made to have a zone of monetary stability, to have a monetary union. There are trade-offs which have to be done, but so far it has worked very well for the region. And I'm saying to you that it's entirely up to members of this zone if they want another peg. But for now, I think it has enabled them to have stability in monetary terms and also to encourage a zone of low inflation. Now, there may be issues about how that influences competitivity. But you know, competitivity is not simply a matter of the value of the currency. There are many other things which contribute to the competitivity of the country. So you have to put this question to members of the zone. But in my judgment, the stability created by this union has been beneficial, even if there have been trade-offs.
The way forward, what good practices for the African economy at the moment will you advocate?
I think there are three things for now which are vital. One is maintaining macroeconomic stability. We paid a high price for it with the reforms in the 1980s, 1990s. Stable currencies, low inflation, low deficit, low debt, that kind of stuff. So that's number one. But that is only a foundation. Number two, it is to continue to ensure that economic growth, which so far is reasonable, turns into economic transformation. Not simply growing the economy, but transform the structure of the economy. And the third is to ensure that growing economies work for all, economic inclusion, so that everybody shares in the growth of prosperity. So for me, if there was macroeconomic stability, economic growth into economic transformation, there is economic inclusion, shared prosperity, that would be the targets I'll be looking for in the next few years.
Okay, the former president of the ADB, this is our parting question. It is a tradition on the program. You were boss of the ADB. Is there any decision you took as president which you regret today?
There will be many decisions which I took, which I could have done differently. But the nature of a leader is that...
Just give me an example.
I'm saying to you that a leader does not regret. A leader decides. All right? A leader makes trade-offs. And they'll have made many trade-offs. So there are things I did well, things I would have done less well. There may even have been unintended consequences of things I did. It's up to the new team to correct it. But a leader who fears to make mistakes, which is what you're asking me to do, should not be in a leadership position.
The former president of the African Development Bank, Donald Kaberuka, I'm afraid we have to end here. Thank you very much indeed for being guest on Globe Watch.
Thank you.
It was even rumored one time that you were to be appointed prime minister in the place of Manuel Valls and that you rejected. What will you provide as solutions? Because for the moment, it seems that it is a confused situation.
But the truth is that French economy is not in enough of a good shape to seriously address its problem number one, which is high unemployment, especially among young people, where the rate of unemployment is around 25%, which is far too much for a highly developed country like France. So that's the problem number one. This is the problem which at last the French government is trying to address. Everybody can see the sort of resistances this modernization of the labor market creates, and this is an evidence that it's not easy. I think it's going in the right direction, although, in my view, too slowly.
You think it is going on the right direction? There is, of recent, the labor law, which has created a lot of tension and controversy, even within the governing Socialist Party. Not everybody is on the same side of the government, what they call La Loi Cromie, or the lady who is a French minister of labor. Do you think the current law is good?
I think this El Khomri legislation goes in the right direction.
If
At
it is-
last,
If it is all that good-
France is trying to do what other countries who've had problems of this kind have done, which is reform their labor market. We've had this problem for a long time. We haven't done what others have been doing for a long time. At last, we are starting doing it. Now, is the quantum enough? No, not in my view, but better than staying where we were.